The broad
Okay, welcome everyone to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, November 17th. We just got the release of CPI figures out of the United States. Sort of mixed here. You have a little bit of a better read, or right in line with on the month-on-month, a little bit weaker on the core. Year-on-year, more importantly, is at 1.6%. The core year-on-year, ex-food and energy, coming in slightly below expectations at 2.1%, a small slip there. Remember, this is the preferred gauge. Broadly speaking, looking at what the Fed looks at, they like to look at the core PCE, the personal consumption expenditure, as the main gauge of inflation. Nonetheless, you're seeing a little bit of a slip here. So interesting to see. We also got housing starts slightly better than expected. So mixed print on the data block. You're seeing a mixed picture for the U.S. Dollar here to start off the session. Here's what the relative performance looks like. Euro top performer up 0.13%. Aussie, which was our highlighted piece from yesterday, biggest loser, down 0.37. Yen down 0.34, and certainly you're seeing dollar yen hold right near the highs there. So we will review that. This all comes on the back of some commentary that we just got from Janet Yellen. And some highlighted comments I just want to kind of run with and highlight to you guys. The main thing that you saw hit the wires was right here. Yellen says that rate hike could be appropriate relatively soon. She also warned about the risk of keeping rates. Delaying hikes too long could mean tightening faster, which again would suggest that she's more in the favor of starting to tighten sooner rather than later. These comments all come on the back of an interest rate expectation that has continued to mount. And certainly we looked at this yesterday, guys, but a quick look again. Fed Fund Futures now pricing in a 96% chance that we'll see the FOMC move to hike interest rates next week, or next month rather. So with that said, how much lift can these comments, can these expectations give to the dollar? I don't know. I think that kind of mentality of hiking or buying the dollar on the basis of higher rates at this point is kind of exhausted. More so, what the markets have been reacting to, and what I alluded to yesterday, guys, is the glide path or the future path for interest rates. And certainly we looked at this yesterday as well too. We'll continue to see this line start to move higher as the overnight index swaps start to price in higher rates later down the road. And next month is one of those quarterly releases. So we get the projected, or we get the updated projections rather from all the FOMC members as it pertains to growth, inflation, unemployment. And certainly if we see those dot plots really start to move higher, it would shift this glide slope to the upside, and that would be a more lasting support for the dollar. So just keep in mind, again, expectations for next month are all but priced in at this point. Okay, so let's jump into yesterday's piece. We'll take a quick look at the dollar first, and then I know Dee's got to run, so we'll take a look at Kiwi from last night's update, Aussie and Aussie Kiwi. We'll take a segue into Aussie CAD, which has continued again to go right through the downside targets, guys. Aussie CAD was a nice reversal trade. That's taking out all our targets right now, holding just below that last target and the yearly open. Euro dollar, dollar yen, both at near-term support and respective resistance on dollar yen. And then we'll take a quick look at all the sterling crosses, guys. Sterling dollar, sterling yen, euro pound, all unchanged, but the levels still remain key here from where we are in relative price. So we'll take a look at those as well. COM, I gave you the levels. We'll take a look at the COM block. Oil is the only thing of interest for me. The hard commodities, silver and gold, are kind of lackluster, really unchanged. So we'll take a brief look at those, but largely speaking, crude is really the kind of focus there on the commodity block. Hey, you're more than welcome. Appreciate that, Conwall. Eileen, good morning to you, and good morning to everyone in the room. A little delayed there on my part, but great to see you guys all here. Kelly, Mark, Pete, Pooja, Steve, Trevor, Ziad, D, Graham. Okay, let's jump right in. First things first, dollar index looks like this to start off the session. So This is the high from last year. This is a 13-year high in the dollar index. This is the ICE dollar index. We continue to hold below that near-term support, 99.50 to 99.70. That hasn't changed. Neither has the near-term structure. We basically broke to the top side of this formation, and that's the near-term support that you need to respect. And that's the level, if we break, what would mark a more prominent correction in the dollar. Till that gives out, you got to respect that support zone in the index. Okay, so no change at all from yesterday. As far as the ICE dollar index is concerned. And let's jump right into yesterday's piece. Here's what, let's do the Kiwi first for you. Aussie was the more interesting one because obviously we got that data print, and we'll go over that in a moment. But just because D's got to run here, let's take a quick look at what the Kiwi's doing. So here's what Kiwi looked like last night. We came right into a key support zone that is defined by last month's low and a basic 38.2 retracement. That retracement is a 2016 retracement. Here's what Kiwi Dollar looks like right now. Here's the daily. Here's your 2016 retracement from the January low, 38.2, last month's swing low, and you saw a nice rebound off that level yesterday. I was looking for a more prominent rebound to try to get back on the short side. You still want to remain bearish below the monthly open. That's our near-term bearish invalidation level. And a break lower, be mindful of the 200-day moving average. I don't want to target it per se. This is the more critical target. You're looking at the lows from July and the swing lows that you made here back in June. Both coincide right on the median line off the highs here over the next few days, right around 69.50, 69.70. Okay, so on the broader prospect of where the Kiwi dollar is, you kind of know your targets pretty well. Give me one moment, guys. I do want to just scope out what this pitchfork would look like. Bear with me one sec. Okay, so interestingly enough, I kind of figured this might happen. If we take a new pitch off these three reference points, it's a little bit different of a glide. You can see that the slope is a little bit steeper on this one. The only thing I want to highlight is this: the median line continues to highlight near-term resistance of what we're looking at, and you have the 50 line or the bisector also highlighting the same support region we just talked about. All right, so either way you slice it, I'll work with the slope that's a little bit more of a deader gradient here, and it'll still continue to highlight that same key region. So long story short, today's high right on 71. Again, I would have liked a little bit higher spike, but we did tag right into resistance. Bearish invalidation, 71.50, break lower, you're looking for that 69.50, 69.70 region. Here's what it looks like on the intraday chart. And here's where we were last night. Okay, this is a 240 minute. You saw that we came right into that pocket support zone, popped higher, looking for a little bit more of a rally towards 71.22 is the ideal region. That's a basic 236 of just this near-term decline. You had former slope resistance there. It was backed very closely by the monthly and weekly opens. Again, our bearish invalidation at the 71.50 mark, which is the monthly open. So you had a really nice sort of setup here to try to get a little bit more of a prominent short. Didn't quite get up into that region. Oddly enough, look what caught resistance overnight. This, my friends, is the basic trendline resistance that dates all the way back to the January lows. Channel support, support, break, resistance. This is where we wanted to get in. That median line or that basic trendline support caught it. So long story short, guys, you want to stay bearish here, looking for a break. This is still the key support region to get through. So you might see some sort of back and forth consolidation into the close here. But basically, that's sort of the key level or key range, let's call it, that we need to get through to look for that target down to 69.50, 69.70. Didn't get filled yesterday at 70.35. The low was 70.36. And I was in a meeting. Oof, I hear you. I hear you. So sometimes when you're putting targets like that, you're starting and you're trying to get the bounce. It's better to keep the target on the inside. So 70.35 was the exact low from October, right? Sometimes you just want to give yourself a little bit of a cushion of a breathing room if you're trying to get along off that. And certainly, like I said yesterday in the report, guys, you know, from a standpoint of Kiwi. I know it's shaded here behind this tag, but you can see much stronger divergence, and I highlighted that yesterday. Price action making a much sterner low, the oscillator making a higher low. Now this was the 240-minute chart, but you could see it pretty clearly. So I see what your reasoning was for trying to get long there, but put your targets on the inside. Give yourself a 5-pip, 3-pip cushion, especially when you're trying to target a key high or key low. Sometimes the market will turn just shy of it. So I know that frustration, but she says understood, just being greedy. Yeah, sometimes we try to get that exact target. Over the years, I've really strayed away from that kind of mentality. I usually put my limits on the inside. I put my entries on the inside, and I'll forego, 5, 10, 15 pips just to make sure I get filled, right? The markets don't work in a vacuum, and a lot of times you won't quite make it right to that support or resistance level you're looking for. So if you're holding shorts on this reversal, you're looking for targets and limits down at 70, 50, 70, 35 again. If we get into that region, I'd be taking some off the table, bring stops to break even, leave some on, because if you get the break, it's a nice run down into 69, 69, 69.50. If you're looking for new, fresh positioning, you got nothing really here, okay? If the U.S. trade session reverses and you see a rally back into that 71.20, I'd still be interested in entry. On a downside break, guys, don't start chasing this, okay? If you're not already short, we kind of missed that boat. We need to see what kind of reaction we get down into that key support region. All right. I'm still targeting HAP at 70.35 and balance at 69.60. So just watch this, D, because again, the bounce here was the counter trend move. The broader trade still remains pretty bearish below that 71.20. Bearish invalidation, 71.50. D, does that help? Does that make sense? Yeah, you're more than welcome. And that is Kiwi Dollar. You're pretty light on Kiwi data. Got nothing really on tap until next week. So you'll be looking for the dollar to really drive this. Actually, retail sales ex inflation comes out tonight. That's for the third quarter, and PPI figures as well, but unlikely to be a major market mover. Many, many thanks. Hey, more than welcome, D. Cheers. Okay, let's go back to last night's update. So that is Kiwi Dollar. Let me know if you have any questions, guys, on Kiwi or relative positioning from where we are. I'd still in sell the rally mode. I'd be looking for entries near 71.22, 71.30 if we get a stretch to the upside in the U.S. trade session. Broadly speaking, looking for that focus break below 70.35 to get the continuation lower. Aussie Dollar. And what a play it was in Aussie. You got some volatility on a 50-pip swing on the release of that data from Australia last night. Excuse me. So the employment gauge was really weak. Here's what the numbers look like from Australia. Let me bring up the chart first. Here's what Aussie looks like. And here's what the numbers look like last night. Okay, really weak in that not only did you miss basically across the board, we'll go over the unemployment rate in just a moment, but you also saw big downward revisions to the previous month. Okay, full-time employment, which contracted 53,000, actually contracted 74,000. And yes, you did see an uptick in part-time, but that's not what you want to see. That presents lots of structural issues in the employment market. So definitely you want to see full-time employment really start to gain. That saw a massive contraction. Okay, we saw the participation rate unexpectedly downtick from 64.5 to 64.4. We were looking for an uptick to 64.6. So as we noted explicitly yesterday here in the webinar, guys, the fact that unemployment held and didn't uptick as expected, held at 5.6%, is completely null and void on account of the participation rate contracting. And contraction in the participation rate will tend to put artificial downward pressure on unemployment, not a positive development for the labor markets. So interestingly enough, as weak as that data was, Aussie couldn't really break support, which still had me thinking, you know what, it probably still needs to see that rally into former slope resistance to get back in short. We're seeing today that that's not really happening. It's a slow decay lower. I don't want to get short down here. I can't justify that. There is no risk reward, risk management on any type of move like that. But I am bearish. So I'm looking for a rally to sell if we can get some sort of near-term pullback in the dollar into the U.S. trade session, you might begin an opportunity to get back in. If you're holding shorts, stay steadfast. I would keep my stop against the swing highs from Asia, but I essentially be looking for the next target down, which is 74.20, and more importantly, 73.86. This is a big level. This is the 618 retracement of the entire rally off that low that you made in May. It also coincides with the 25% line, or the 50 line of this quadrant, for the broader formation we're following off the highs. And that coincides again near 73.86. So the levels are pretty clear. I kind of still need to see some strength to get back in if you're not already short. Near-term resistance, 75.20. This range right here, the former swing lows, remember, very clean opening range for the week. Here's your weekly open. You set a high, you set a low, you fail at the lows, you test the highs again and fail, you break. That keeps the focus lower, looking for a late week low. Well, it's Thursday, okay? So the focus remains lower, looking to sell rallies. If we do see a continuation lower into the U.S. trade session, 74.20, 73.86 on tap. Remember the broader implications of where we are, guys. This is the break of the cleanest formation. Super basic, super clean, invalidated multiple key levels, including slope support, 200-day moving average, the median line off the high. I mean, you name it. So we are looking lower. Okay? Questions on Aussie dollar before we move off. All the Aussie crosses are super interesting. Love them. Loving them right now. Having looked at Kiwi and having looked at Aussie and the relative price action of both, shouldn't be too surprising to see that Aussie Kiwi is following right down the line of what we were looking at earlier in the week. So here's what Aussie Kiwi looked like last night. Again, from last night's Aussie update, key support, downside targets, everything remains unchanged. Looking at Aussie Kiwi, super interesting. Okay, here's what it looked like last night. And let me take a step back and just take a quick look at what we were looking at earlier in the week. Here's the update from the 14th. Here's the daily chart. And this was really the premise of the trade. You're heading into major key resistance, 106.63, 106.55, major level of resistance, the monthly open, sliding parallel, or the 25% line of the ascending formation. And we said, look, there's lots of resistance here, guys, and we're looking for exhaustion high to get back on the pullback. It's exactly what she got. It took another day after the 14th, on the 15th, and even the 16th here yesterday. We tried to press it again, but inevitably, you got a downside break. And the reversal coming into that initial support, the January lows, 100-day moving average. We came right into that pocket and rebounded off yesterday, or today rather. Okay, given the relative price action of what we're seeing in Aussie and Kiwi, as I said though, it looks to me as if we could see this thing try to make that low into 105 still. 105.90 would be like an awesome level. That's right here. And remember, with Aussie Kiwi, the main slope of influence is still what we're looking at. Okay, from that January 2014 low, this is the daily chart. All these slopes have continued to define such major critical turns in price. We have to continue to respect that. And the slope extending off the lows from, 2015, although we've sailed through it a couple of times, converges on the lower median line parallel. And that's right into that 104.90 region. So I still think you're at risk for a possible pullback lower, broadly speaking, and most importantly, we are looking to inevitably get long. How far retrace up to look to sell then for the Aussie dollar if it doesn't get quite to structure? Eileen, Aussie dollar. So the only thing you can do is try to look for, like I said, the Asia highs would be the first level I'd look for. And then the opening range low for the week. These would be the first initial targets I'd start to look for some resistance, Eileen. Ideally into this median line, but I don't know if you'll get it. It's starting to drift away pretty hard here. Does that make sense? Okay, makes sense, says Eileen. Trevor, good question. I get that often, and it's very important. So Trevor says, Mike, how many days do you use to determine your monthly opening ranges? And I always tell people, Trevor, it's not necessarily determined by the length of duration. I don't want you to stress days. I want you to stress price action. So Trevor, what we're looking for is for the market to set a high, to set a low, and then retest one of those highs or lows. Could do the opposite. Could set a low, then set a high, then retest one of them. You're looking for a range to form, and then a reversal and test of the opposite side of that range. Sometimes, Trevor, that happens in the first 5 days of the month. Would be awesome. Sometimes it happens in the first 15, 16, 20 days of the month where it sits in the entire range and doesn't break the opening range till late. So what we want to focus on, Trevor, is what price action is doing more so than how many days it's taking. Same thing with the opening range for the week, right? You can have a really well-defined opening range that takes place just over the Sunday-Monday stretch. Sometimes that opening range won't even form until the Wednesday high or low. So it really is dependent on what price action is doing, and our study will always be what the near-term price is saying. Trevor, does that make sense? So for here, for example, this is an example of a weekly opening range. We can see that we broke yesterday, right? This opening range could have held till Thursday and broke. That's still an opening range break, right? So it's really what, more importantly, what price action is saying, necessarily than, trying to make it a stringent rule with this or that many days. Okay, that's very clear. Thanks very much. Awesome explanation. Cheers, man. Do we look at the wicks, not just the closes? So, Trevor, it depends on, I don't want to give you a wishy-washy answer. It depends on what's going on in price. Typically, yeah, I'm looking at the wicks for the high and the low. Very, very simple. And, Trevor, the best way, and the reason I do that is because I want to be as objective as possible. And that's the whole idea behind trying to use opening ranges to your benefit, guys. It's that it's an objective way of looking at price. Has nothing to do with my opinion, has nothing to do with what the fundies are saying or what event risk is on tap. It's what price is doing, right? So yeah, I tend to look at the highs and lows. If you're seeing a radical range and a day where there's a massive event risk, I'll tend not to stress that day, Trevor, especially if it invalidates the opening range, right? Because again, once you get these really emotional spikes in volatility, it tends to skew such a study of price. So don't be too rigid with it. It's not a strategy in and of itself, but certainly has been a great part of my trading as an added indicator, an added conviction on whether the trade is in fact panning out in the direction I'm looking for. He says, got it, thanks. Right on, Trevor. Good questions. Good questions. Okay. Any questions on Aussie dollar or Aussie Kiwi for that matter? Here's Aussie Kiwi. So you're seeing a little bit of a bounce here. Again, there's that 105.51 barrier. The January low, obviously, we're kind of recovering from it now at this point as well. Okay, near-term resistance, let's clear this up a little bit. Near-term resistance is basically right here. It's your monthly, your weekly open. I'm going to jog that line there, even though we have the dots, just to make the tag for the level. So that's your weekly open. Subsequent to that, and this is a real near-term measure. Just let me see what it looks like. 618 comes in at 106.05. Actually, not a bad pivot in price. The bottom line for the Aussie Kiwis, 106.70 is the level to beat, okay? You got the 2016 open, a 764 retracement. Depending on where we are in time, it's going to converge on this upper parallel right here. So if we kind of continue to drift lower, which is why I still think there's room for a little bit more of a drop here. If we drift a little bit lower here, there's room in time for us to try to make a break of this key threshold, and this would mark straight on continuation for the broader uptrend off the lows there. Okay, so a little tricky from here. Still thinking we make another dip into that 105 region. 104.90 would be great, area of which you'd start to look for a little bit more of a strong support barrier in Aussie Key. And it kind of meshes well with where Kiwi is holding its own, right? Little bit afloat, let's call it, today in U.S. trade as we head into the open, where Aussie's still the biggest loser on the session. All right, 1, that was 2, was number Kiwi, 3 was Aussie, 4 was Aussie Kiwi, Aussie CAD, number 5. Here's what Aussie CAD looks like. And I expressed my frustration about this trade yesterday, but still haven't gotten a chance. Here's Aussie CAD. It's just playing right through our fingers on this one. So we were looking for that 120, 101.40 barrier as near-term support. I was looking for a bounce so I can get in on a short. Again, even from a near-term prospect, you didn't even get a chance. It sailed right through. Key support was 10060, the yearly open. You had basic channel trendline support off the yearly lows. Former trendline resistance, now support. It all coincided right here, the lower parallel, and we broke right through, and that's now near-term resistance. Here's what Aussie CAD looks like. First on the daily chart, if I can find it, here we go. Okay, the one thing I was looking at yesterday, I'm not sure if I added it here in the webinar with you guys or if I added it afterwards, but there is a sliding parallel. If you take that same slope and extend it off the highs that we made from September, right here, we're sitting there right now. In fact, yesterday's low was just above that. We're kind of sitting at that right now. I want to see what happens around this region. I do have a more critical support barrier just lower, 99.70 into 99.87. It's a basic 38.2 retracement of the entire 2016 range. And it's also a very nice pivot in price, just basic pivot at 99.70. That's constituted by the high that you made back in July. Really nice pivot. Support back in October. And again, now coincides with the 100-day moving average. So this is sort of your next support barrier on a move lower here on this stretch in Aussie CAD. What a beautiful reversal right off of channel resistance. This is a basic slope off the lows. Take that slope, take a parallel off the high that we made in December, specifically of last year. Nice catch, pull back. I wonder if there's anything here meaningful. Huh. That's interesting. If you take it off the high here, might be something to look at. You can see really nice resistance, pivot, support, and that same line coincides on that same region near term. I'm not going to leave it there just for the sake of keeping the chart clean, but I just want to highlight that. You're running into, here's another slope. Resistance, yeah, you got a messy break there, but resistance, break, support, 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 and that highlights our next downside target, 98.60, which is also really close to that 200-day moving average. Looks pretty good. I do like this. So long story short, near-term resistance, 100.16 to 100.70. I'm going to work with that as my immediate bearish invalidation level. As long as we stay below that, I do want to look lower. Near-term support, 99.70 into 99.87. Even from a momentum standpoint, really nice consolidation break, divergence, price action higher high, into a trigger break. We highlighted that earlier in the week. Look for that decline. And a nice break. Trevor, here's a perfect break of the monthly opening range. Here's your monthly open. You rally right off a base. You come into that base. You spent a couple of days there. Outside day reversal, breakthrough support, keeps you looking lower. Here's what the scalp looks like. Look at the same targets. And again, if you take that sliding parallel real quick, you can see what's going on here. I don't want to stress it, but if we suck back up, if we kind of reverse right back into this, a rally into this region would be a nice area of which you'd start to look for possible entry back on the short side. Questions on Aussie CAD as we go and complete all our Aussie crosses for the day. Next up, I just want to talk really quick touch base on Euro Dollar, Dollar Yen. both of those kind of unchanged. And then we'll look at the sterling crosses, which are also unchanged, but still sit at critical levels, I think. So we want to kind of keep those in focus. Moving right along, euro dollar, number 6. Here's what euro looks like. It's been kind of a boring play, but the only thing I really want to consider is I do still think near term we could get some play on the long side. Now, inevitably, I think it breaks lower, but I do think near term you're still at risk just on account of the massive decline that we got, the sheer magnitude. Like I said yesterday, 2, 3, 4, 5, 6, 7. We actually completed an 8th day of consecutive declines for euro dollar into the 100% extension off the highs. So 106.62, 106.60, level of which I still think you're at risk while above it for a near-term recovery. The recovery levels of interest would be somewhere in the range of 107.76, basically this gray median line up here, and then we'd look for possible reentry, but I don't have enough conviction on it just yet. Keep note that we're still in oversold territory in the daily chart, not my favored time to start trying to fade the decline. Near term is where it's at. Here's the 4-hour chart looks like, and then we'll jump into a closer chart in a moment. What I wanted to show you here is the ongoing momentum divergence we've been seeing all week long as price action continues to make lower lows, bringing it to a close. Look at the line chart, easier to identify, lower point, lower point, lower point, series of higher points, all above 30. Pretty decent signal. Remember, when you're seeing divergence, it gives you no indication of time. And it's the one caveat that I always want to just throw out there. It's important to be able to recognize it. It can be very beneficial in helping you get poised, right, to be in a position. But you can see divergence last for hours, a day, a week, a month, before it even starts to pan out into a reversal. So all I'm saying here is that you're seeing downside momentum wane. You're seeing price approaching a pretty critical support barrier, and not only from that Fibonacci standpoint, but also basic slope support. Okay, and that's basically defined right now and converges into the end of the week right into that 100% extension. Game plan, possible stretch and another attempt at a break into this region. I'd be looking for some exhaustion. If we get back above this purple line, which is basic slope, former slope support, really nice pivots we've had off this slope throughout the entire decline off the highs from June, would suggest, again, you'd look for a little bit more of a topside recovery in euro dollar. All right. So no change to any of the levels from earlier this week, but I do think you don't want to really press the short side at this point. If we do see a break lower, by the way, your contingency plan, you're looking for 105.80, 105.85 on a stretch that's the lower parallel for the current operative formation off the highs, and a longer-term trendline support from the 2015 lows. Questions on euro dollar? Risk for a little bit of a reversal and a rebound off this region, or while above 106.60, I should say. That's really the threshold or the support we need to get through to get the next leg lower here in euro. Looking for that rebound to get short again, or just really no short down here for sure in euro. No, if we get a rebound, Eileen, inevitably I would be looking to short it. The immediate risk, in my humble opinion, is to look long against 106.60. Does that make sense? So from here, if we get another stab into this region, I'm looking for long triggers into the U.S. trade session. Inevitably, on a stretch into, this would be the first target I'd start to take some off the table. But if we get back into the weekly opening range high, the weekly open, former slope support, now resistance, again, I'd be looking for possible reentry here for the next leg lower. Make sense? Gotcha. You're more than welcome. Not my favorite trade, guys, but something to keep an eye on. If again, most of my focus has been in Aussie, sterling yen, Aussie Kiwi. I'm still trying to get something in there. I'm not really a big fan of the euro where we are right now, but I think it's prudent to highlight this support region near term. Just on a Fibonacci approach, 2 equal legs off the high is something to focus on. Okay, that was number 6, euro dollar. Any other questions on euro before we move off? Next up, dollar yen. Again, for the yen cross, I've been trading it through pound, but here's what dollar yen looks like. You're still continuing to hold below that slope. This is basic 50 or the 75% line for the ascending median line formation we've been following off the lows. You're kind of dilly-dallying around this 38.2 retracement at 109.12. You're getting the onset of what looks to be possible divergence into the highs. You can see here, it's way too early to call this a lower high, but nonetheless, you're basically looking, well, actually we closed already. Scratch that. Yep, scratch that. We actually made a higher high, so that divergent signal is gone. Long story short, you can see how clean this looks. So respect that for now. I still think, dollar yen obviously it made a pretty significant breakout. My only concern is that you get a little bit of exhaustion play to the downside first before you rally higher. Topside targets unchanged at 110.66 and 111.44, inevitably. But I do think you're at risk near term for a little bit of an exhaustion play here. Here's what it looks like on the 2-hour chart. 1 hour. Okay, here the divergence is a little bit more prominent, okay, on the hourly chart. Made a, I'm lying again. This was the only divergence signal here. Price action made a higher high. The oscillator made equal highs right there on these two reference points. Levels unchanged, near-term support. Look for that median line first initially, okay? And near-term bullish invalidation I have at 107.50. If we get below 107.50, I think you get a little bit more of a downside correction towards slope support. That being said, you're looking for a pullback to get long in dollar yen. Near term at resistance. Number 7. Sterling crosses. Here's a little bit of a duller couple of pairs that haven't really been doing anything lately, but I'll take you through it real quick. Here's what the pound looks like. We got retail sales figures this morning that were much stronger than expected across the board. As you can see here were the releases. Expectations year on year for came in at 5.4. Came in at 7.6. We were looking for just 5.4. Including auto and fuel, also way above expectations. Nice upward revisions to the previous month as well. Pretty strong data across the board here for the UK from the retail sales front. That calls it for the remainder of the week as far as data from the UK. Here's how the sterling reacted. You did see a decent pop in price, but we continue to hold below near-term resistance. And here's what it looks like on the hourly chart. Well, I guess, yeah, let's just focus on the hourly chart right now. The daily chart's pretty ugly. Here's what it looks like. So the ascending median line formation that we were following for the last 2 or 3 or 4 weeks, basically, still is the same slope. Look at the 50 line, or the 25% line, rather, of the entire formation. Support, support. Median line, support, break, resistance, resistance. And as I said yesterday, the focus is on this, if you can visualize it with me, guys, real quick, is on this consolidation pattern, this little triangle. Okay? Gunshot approach to the head, I would say probably get another stab down into 123.54. You look to buy that rebound for a break higher. If the consolidation break clears it, I still want to clear this median line to validate a continuation and broader break to the upside. So remain constructive pound. The immediate risk is for a move lower, but we are looking to inevitably buy that dip. So lackluster in price so far this week. You got a decent range to trade with, but not so much. Still looking to stay pretty constructive here on pound dollar. pound yen is my favorite play on the pound weakness story. And you guys know that all week long I've been scalping the short side of pound yen, which is interesting because we're higher on the session. But the basis of the trade is, again, you're coming into a big, big resistance zone. Here it is. Clear as day, 136.18. We probed through it 3 or 4 times, or the last 3 days we've been probing through it. We're actually above it right now. But again, slope resistance, former slope support, key 618 retracement of the decline off the highs from July. You're above that trend line right now, but you're still struggling to do that on a closed basis. So I'm not in anything right now. I would be interested in possibly taking another stab at it for a 4th time this week if the US trade session offers some nice short triggers. Here's what the near-term chart looks like. I've been stalking this thing all morning long. You're seeing momentum start to fail at 60, fail at 60, fail at 60. So again, might be worth another position. It is Thursday, so if you see a break of the highs from yesterday, look for a rally towards 37.23 and the high day close at 38. If we break the highs, I don't want anything to do with this thing on the short side, but we've gotten some decent trades. 35 pipper early in the week on Monday that we talked about, a 55 pipper yesterday we closed out. So I still think you're at risk for a near-term pullback. Inevitably, 133.20, 133.40, if we get down there, would be a sweet spot for me. I'd start looking for much more rigid support. And again, at that point, we'd be looking to target subsequent upside resistance levels into 38. But near term, still think it looks a little bit at risk here for the pullback. Dollar yen moving lower would be encouraging for sort of a yen strength story to kind of give us a little bit of a reprieve from the weakness we've seen. But certainly we would need to see that start to gather pace into the U.S. trade session today. Can you talk a bit on timing for pound yen? See if we'll go higher first. Clarify your question here for me a bit, Eileen. I'm not sure what you mean by timing. Like when we would take the next intraday scalp? Oh, timing of the morning. Okay, with you. I'm with you. Gotcha. So here's the U.S. trade session. Okay, let's open this up. Here's the U.S. trade session. We've already started to see signs of exhaustion, right? Even on these last 2 highs, price action pressing into a higher high, the oscillator making a lower high. That was an opportunity to get short. That trade has already panned out. You want to kind of play it real close to the chest here. This quarter of the daily ETR is showing 48 pips, so you wouldn't have actually gotten a quarter there. But the point is, on the rally, here's momentum holding 60. This is a 1-minute chart, but the 5-minute chart's showing the same thing. So near term, you are at risk for exhaustion. Let's just take some, it's a nice drill to always do. Take some triggers here. That looks like it kind of couldn't have been a little bit of a mess there. Oops. And then looks like that. Looks like it just broke right now. So you would have a stop basically with an entry right here. Stop against that 136.40 region. On a downside move, your initial targets, okay, would be 135.51. That's so interesting. 135.51 is also, look where my cursor is on the chart on the right, is also the London opening range low. Ha, there it is. So you'd be looking for a move into London lows. Initially, you take some off the table there. That would be way more than your 48 pips that you're looking for on a scalp basis. Subsequent target, I take a little bit more off again at the U.S. lows that we made, or Asia lows rather, excuse me, last night. And then the weekly open, key support 133.46. I always keep something on the position, guys. I try to keep something as insignificant or little as it is. That's how you get the bigger swings. My point is, I would say on 80% to 90% of the trades I've taken just in this recent environment over the last month or so, there's been at least a quarter, a fifth, a tenth of the trade that gets stopped out at break even, and that's okay. I want something in the table. I want skin in the game. So if that I am right and the turn is materializing, I get to ride that larger range. Yeah, I'm not going to have anywhere near the amount of leverage that I was in on the initial position, but that's okay, right? So just keep that in mind. But yeah, I mean, that would be the game plan for me. Initial target down at that opening range. I'd have my stop at break even on that limit, and then the subsequent downside. But essentially, you want to stay. The immediate bearish invalidation is the highs that we made for the week. Make sense? Yes, I saw I was ready to take, but the U.S. Open is in just a few minutes. Right. Yeah. So again, I tend to not take anything until the U.S. Open starts to come online. You get that last sort of volatility. Sometimes if it's a rally and the market is moving higher like this, you'll get one last stretch as the traders come in for U.S. Try to jam it into resistance one more time. So we'll see if we can't get that move to get initial entry or another entry here. This might be beyond us, though, just from the momentum signature, Eileen, the way we're pushing off 60 here. So we'll see if we can't get that entry. Hi, I am Arvind in Dee's office. Welcome. We got a visitor in the room. He has requested if you can look at Euro Pound as he's short in the market. He will look at the archive later. If you can kindly cover this chart. Thank you. Hey, Dee, more than welcome. Arvind, we'd love to see you in SB, my friend. Let's go over Euro Pound, which is also on the list. So for Pound Yen, any questions on that before we move off? We went over Pound Dollar. That was number 8. Pound Yen is number 9. Here's Euro Pound, number 10. So Euro Pound, this is a setup we highlighted earlier in the week. Okay. Eileen, he is short in the market. Okay. I don't know where you're short from, Arvind, or exactly what kind of position you're looking to take this, but this is what I would say. Mark, I'll answer your question in a second. 86.30. You're in from 86.30. Okay. Here's what I would say. On a position like that, I'd be break even at this point, just on account of this. Look at this. You basically set a weekly opening range here. Nothing's broken. And this is what the setup looked like earlier in the week, guys. Oh, that was it. Euro Pound, right? And we highlighted that basically your weekly opening range is set just below near-term resistance at this range right here. So you're looking inherently for a break of this range to get validation for a near-term directional bias. I am thinking lower in Euro Pound, but near-term, you still need to respect the fact that we could make another run right back into that median line before we move off. So I don't know if you're going to be able to withstand, I don't know where your stop is, a rally, you know, back as high as 80, 86, 85 or so. These are pound pips, keep in mind. Also keep in mind, just above your entry there is, well, not, this is below your entry, but right here at 86.10 is the weekly open. The highs I would be respecting as resistance is 86.25 or so. So if you have a stop at break even at this point on your trade, I think if it does max that high, you're probably going to get a little bit more of a concerted rally in which you might get a better entry back on the short side. Your target being at 85, I think, is right in line. Love it. You basically have slope support right there. Let me bring this into a 4-hour chart, make this easier to see. Okay, here's the median line off the low, support, resistance, support, support, break, resistance. That line converges on a basic 764 retracement, a little bit lower, but just ahead of that, 85 would be a perfect target in my humble opinion. I think that'd be right on line where you want to be. He says, sorry, D, just said he's short at 87. Oh, we're talking different position here. From last week and stop at 86.30 and targeting 85. That's how I would play it. That's exactly how I would play it. Yep. You see 86.30 break, take your profits and run. Downside move into 85, I'd look to book profit. Yep, right on. Well played. Questions on Euro Pound? D says, thank you for all this. Regards. Anytime, D. My pleasure. Okay, so that is Euro Pound, and those are all the crosses. We went through Aussie Kiwi, Aussie CAD, Euro Yen, Pound, Pound Yen, Euro Pound. Let's hit the com block real quick. Here's what Crude looks like. You're getting a lot of headlines making Crude. Obviously, yesterday's build, I tweeted it out on the release, guys, was massive. So definitely from an inventory standpoint, that's not the issue. Conwell, we were talking about this through chat just earlier ahead of the webinar. This is the resistance level I was talking to you about, man. If you're holding longs, which if I'm not mistaken, you are from yesterday's webinar, you watch this region, 46.22. Now, the monthly open does come in just higher at 46.75. So I wouldn't put it past this thing to make a spike into that region. I do think you're at risk for a pullback from here, just on account of where you are in slope and that monthly open. So sort of like another region. I know this is getting messy, but where you might want to just consider taking some off the table if you're long, possibly looking for a near-term exhaustion point on a pullback here. But that's sort of what I'd be looking at near-term for the Crude trade. Broader is what we were looking at. Starting to lose focus with this, what's the word? With this slope, guys. Ha! All right. That's not bad at all. Let's work with that 618. So if we take a 618 of the range for that broader formation that we just started to consider recently, that 618 caught the low that you made there on the reversal trade for 1010. This is October 10th reversal, and then converges right on the monthly open. All right. I wouldn't stress this 38.2 at this point either. And this 618, to be quite frank with you, is actually null and void at this point because we took out the lows. So I don't want to even stress that. Watch the monthly open, watch slope resistance. I think that's going to serve you best at this point. And bear with me one other moment here on a near term. Okay. Again, too early to tell, but if we take and consider this median line formation, you can see the median line here catching the initial support on the pullback after the break. The 50 line hasn't been the cleanest, but certainly we did see some rebounds off that. Once we broke below it was resistance. The break above it carried it higher. The upper parallel further highlights this region right into the monthly open. Starting to really get pretty heavy with levels up there. All right. Combo, does that help? My stop is at 45.94. Target at 46.64. Okay. Target is right into that sweet spot. I love it. I love it. Maybe even just call it closer at 58, 59 region just to be safe. I'd hate to see you get wicked out of this with a turn right ahead of it. Watch how reaction for near-term momentum is as we head into that region. Your stop, 45.95. Basically that swing low. Oops. Where are you long from, Kamal? With the stop below that low. Oh, here it is. As long you're along from 44.66. Okay. Okay, so you're already in the money. That's how I would play it. That's how I would play it. If you break that low, just see the pivot in price here. Yeah, even just below that, 45.92. Do you see that former swing high? Look to the left of the screen there. It'd be a decent region. Yeah, I like that stop there. Well played, sir. All right, so that is Crude. Looking for that rally, looking for that tag of the monthly open. Watch resistance there. Honestly, you could get a pretty nasty reversal off that region. Crude has been pretty volatile, and there's been a lot of talk with this inventory run-up. Is price really going to be able to stay supported at these levels? And if the dollar does pull off resistance, that's only going to further propagate possibly another rebound here in Crude. That being said, I don't want any long exposure past the monthly open at this point. I think you're vulnerable for a pullback off that region. As far as the hard commodities are concerned, guys, gold, really, I mean, there's nothing to do here on an intraday basis. So I'm just going to show you what we're looking at in the daily chart. Near-term resistance hasn't changed, just above the weekly opening range, right around 1235 is near-term resistance here in gold. Key support still 1203 to 12010. That whole $7 range is pretty huge. Don't mess with this on the short side unless this gives out. As far as silver is concerned, a very similar setup in that you're seeing volatility just really die near-term resistance right at the median line. So that's sort of a contractionary range, even more so than gold. I'm still looking for a possible stretch lower here in silver down to the likes of 1651, 1635. I think that's a big region there as well. Nice pivot in price and a key Fibonacci level with that 618. So the commodities have been a lackluster, boring play over the last 2 days. I think you get a little bit more of a nice move and a pop once these things finally start to clear these near-term tight ranges. Silver tight range 1689, 1711 says Conwall. Yeah. Yep. I mean, you could play this range for sure. Even for a scalper like me, that's kind of tight in my opinion. But if you got the time, you got the will, go for it. It's there. Yeah, it's definitely a very well-defined range. I just think this is a little bit more of a contractionary range than gold is. So I think once we clear the range, it's going to be a break. It's going to be a move of the likes of this, something like this. You know what I mean? Here's the last time you saw a contractionary range in silver, the breakdown. You know what I mean? Here we are again. Series of higher lows, series of lower highs. You know, this could give us a little bit more of a concerted break once we finally clear that range. Okay, and even copper. I know Jamie's been following this one exceptionally close. I just want to highlight where this thing is on the daily chart. You know, I tweeted this chart yesterday, and this is why it's great to have a exclusive service like we have here at SB, because when you make something vocal, you just get hammered away by these nutballs. Anyway, all I was highlighting last night is that we have near-term support at 243. You guys wouldn't be surprised about how much hate mail I got. I guess people are short or whatever. I don't know. It's a basic 38.2. It's slope support, former resistance. It's a former swing high from October of last year. And you know, it's the origin of the breakout. Here is the broader formation that we broke above. Now it would give us a little bit of a support. That's all I was saying. And certainly we are higher on the session, up into 250 again. So, you know, the correction lower, if you get the 70 break in momentum and a move sub 243 for sure, I think you probably get a much steeper correction down towards that 233 level, next slope level of resistance, former resistance, now support. But near term, you do have to respect this key support here at 243 into 242.90 or so. Okay, a basic retracement would serve you well here as far as trying to target anything. If you are playing a rebound here, I'd be looking no more than really a 50, but here's a 38.2. 236 is basically what we're tagging right now. That's sort of how I would look to play this recovery. Still think you make another stab at that low before all is said and done. All right, so quick recap there of all the hard commodities for you before we end the week. Eileen says, take heart, no hate in your room. Cheers, Eileen. All right, guys, so we're going to go ahead and wrap things up there. A quick word of note, next week will be a very light schedule. We're only going to have one opportunity to do a webinar on Wednesday, guys. I'll be traveling out to St. Louis on Tuesday. Obviously, Thursday is Thanksgiving here in the U.S. Look, as we head into a shortened holiday week, liquidity is likely to get really thin. So we will give you updates, obviously, throughout the course of the week. But as far as the webinar schedule is concerned, we'll just have one intraday strategy webinar on Wednesday of next week. There will be the free webinar, public webinar on Monday on Daily FX. Definitely we'll still do that. But a quick update there, and we'll keep you updated. The webinar schedule, excuse me, tongue twister there, on the home page. So you'll see that updated shortly right here. Till then, best of luck trading. I hope everyone has a great weekend, and I will see you guys on Monday morning. Cheers.